Well, Amazon kind of was going the way of Microsoft and Meta, but hit a speed bump, kind of taking the market down. But all we're going to talk about today is just these mixed earning reports and the reactions to them all over the place. We got PCE at 8:30. We got Jeremy Schwartz at 8:35. We got more earnings to talk about from the big oil companies. This is Friday. This is pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
It's Friday. We're going to end the week. We're going to end the month here. S&Ps are still in the green for the month by a little bit. We'll see if we can hold on to those gains. As far as today's price actions, things were looking good with the Amazon earnings, but the bottom fell out. We're down 17 and a half handles at 41.3650. Tough to find support in this market after that whoosh up yesterday. The buck on the rebound here. The dollar futures up 51 cents at 101.76 and a half. Bonds rallying today up 23.30 seconds at 131 and 430 seconds. Crude oil, that's up 21 cents, 74.97. Gold loses the 2K level, down 680 at 1992.20. Silver clinging to 25, down 11.4 cents at 25.09 and a half. And Bitcoin flirting with 30K. We're down $515 at 29,425. Let's bring on Triple D. And Triple D, I mean, I thought there would be more action for you after hours here, but it was Amazon. We got the Intel. What a mixed market again. I think that's been the mantra for the week.
It really has. I mean, we kind of got an everything rally yesterday. Everything seemed to pick it up, and it was a really good day for the markets overall. But after hours, complete mixed messages here. Once again, the inverse correlations in some stocks are nothing short of incredible. I mean, Amazon rip roaring higher on that report, and we know we can start right there. They blasted that thing off, loving everything where they were reading in the report. Stock at one point in time was up, I believe, 12 points. Almost, no, actually, it was up even more than that. It was up. How high did you get there, Joel?
Oh, man, let me get the 24-hour chart here.
Joel's going to grab it right now.
Whoa, Nelly. We got up to 123 even.
So we were up 13 points there last night. And then we started leaking. And you know what I found really interesting was the S&Ps were not rallying much off Amazon. And at one point in time, Amazon was up $8 and the S&P was up 2 points. And I tweeted it out at this point in time. I'm like, you got to do the math here, because if you do the quick math, Amazon was 2.8%, I believe, is where it is. It's right around there, 2.8% of the S&P. With Amazon trading up roughly, I think it was 7 or 8% at the time. It was adding 7 points to the S&P. Yet the S&P was only up 2, meaning the other components combined, the other 499 would be down 5. So what you saw in your filters was actually Amazon up, a few stocks up, and just a lot of stocks down, despite the S&P futures being up 2 points. So, I mean, sometimes on these days when you get these heavy components, you've got to just do the quick math calculations, because you could come in and say, oh, the market's doing pretty good here after hours. It really wasn't last night. And then on the conference call, when Amazon talked about AWS growth slowing in April, they hammered the stock. Gene Munster, tweeted out, immediately when those comments came out, and that was the reason. And then it lost another $10. We know it's down $3 here now. They did not want to hear anything about AWS growth slowing, and that's what they got. So bottom line, the gains are gone in Amazon. The gains are gone in the market from last night. We're leaking here, but we're still mixed messages, because we've got some stocks trading up. where Intel, and bring up Intel. Can you bring these two charts beside each other? I don't think you can do that, can you? On your
Yeah, and yeah, I can do that
Amazon
for
and
you.
Intel. Bring up Intel, the 24-hour chart from last night on Intel, just beside each other. And I just want to show you something which I found very interesting.
Let me make
here.
this a 60-minute too.
Yeah, try to make them and try to get them
Same.
looking identical if we can.
There we go. The two left charts are both 60-minute charts
Yeah.
incorporating the after hours and pre-market trading. Amazon on top, Intel on the bottom.
So what was very interesting was when Amazon started to sell off, Intel started to rally, and probably coincidental to a certain extent. But we know, and I've talked about this before too, for whatever reason, sometimes Intel moves opposite to the overall market, the Qs. And I don't know why. There's certain stocks, as Intel is a tech stock. I know why non-tech components can move opposite to the Qs sometimes, because, when the big ones are up too much, they got to sell something to pick up the slack. But for whatever reason, I've noticed this for a while here too. And you can notice even, in the recent pricing action. In March, Intel rallying, and the Qs rallied there too. But Intel rallied a lot more, and then it's obviously giving it back. But in some moments, sometimes Intel actually moves opposite the Qs. And I just found it interesting, and I'm sure it was coincidental. But when Amazon started selling off, they started buying the hell out of Intel. And they couldn't stop buying it. And this, rally in Intel was significantly after the call. Intel was actually trading down for the first hour after the call. And I'm not sure what Intel said, or if they had the call at the exact same time and said something good, because I wasn't following Intel closely. But holy cow, I mean, Amazon straight down, then Intel went straight up, almost at the same time. It was very interesting.
Okay. Well, we pretty much gave the report. You gave the report. It was a 10-cent beat for Amazon on the EPS, and it was a nice beat on the sales by almost $3 billion. But you're right. I mean, it came out and they started talking about AWS segment, slowing, and we talked about that. Amazon picked up on the cloud. Maybe they got or Microsoft picked up. Maybe Amazon, lost a little business there. This is a tough chart here. I would say we're down a little over $3, $3.50, and I think I'll just do a reset from yesterday. I'll go to the dailies here, and we're right at yesterday's low at 106.80. We're just below that. So I think if the street mods make a positive spin on this one, you're gonna get a 106.80 bid. You're gonna get a 107 bid, and you're gonna try and rally back up to that closing price of 109.82. I think it's gonna be tough to get back there because people were looking for the Meta and the Microsoft kind of reaction, and they were chasing it. And if you happen to be chasing this one, you got smoked, and you got smoked
unless you
big
got out
time.
last night, and I think this gives you more reason from last night, and that's why I just want to interrupt you there, because if you sold last night, you did really, really well on it. I mean, this thing popped another 12%, or at least another 10% last night. $13, yeah, almost 12%. So I mean, at the high. So if I think we're just in this market where you've got to continue to take the gains. It's still a trader's environment. And if you're sitting back and thinking, maybe you're going to pick up the Meta where the 100 becomes a 200, becomes a 230, but for the most part, we're still sideways in a lot of stocks. We're still chopping around. And if you're not taking the gains, the market is taking them from you. I think this trading range could stay for a long time, a lot longer than people. People are very, they read stuff that, bear markets only last 12 months or 18 months. So they think, if I'm buying off the highs in the S&P within 12 to 18 months, and I can wait that long, I'm going to be making new money. I'm going to be making money again because we're going to be back at all-time highs. And, in a lot of bear markets, that is the case. But in some bear markets, it's not the case. We've given on this show multiple periods where we've had a decade where the stock doesn't come back for over 10 years, that the S&P doesn't come back for over 10 years. So I think you just have to be careful with just blindly, just buying stocks. I think you're in this trading range here now. And I do think it persists. And I do think if you're running covered calls, it may be, the best way to go about this. Because if we stay in the sideways market, and, to your point, really in April, we've kind of gone nowhere. It feels like it's been a pretty good month. But it's been a pretty good couple of days that has gotten this month back. We're pretty much in the same spot we started. And if we go back to February, we're in the exact same spot we were 2 months ago. And if you want to go back farther than that on the S&P, we're in the same spot we were back in November. We're in the same spot we were back in August. We're in the same spot we were back in April. So really, over the course of the last year, the S&P has gone nowhere. And this is my argument, what I've been arguing for a long time, is we are in a sideways market. The trend is not up. It is not down on the S&P. It is clearly sideways. And how do you play sideways markets? Fading moves. That's why I continue to be a trader here. And that's how, I've done pretty good in the last year, is just fading moves.
Right. And for the S&P, I got the spider chart up here. Look at this monthly candle. I keep reiterating it, right? But that is your smallest monthly candle. I'll go back here to 2019. The spider had, wow, just wow, not much of a range at all. And it's even a smaller range this month and bumping up against this resistance here, nowhere near that August high. I think it's just a real, we're at resistance and like, it's just like you think with the momentum that you had yesterday, and then you see that report coming out of Amazon, you're thinking, all right, baby, this is it. And then you get right back to the top of that range, and now you're pulling back. And as I said, it's hard to find support today in the market, especially in the S&P, because the way, that was this incredible rally yesterday. They just kept on buying it and buying it and buying it. So we'll see where the bulls step in today. Let's go to the Intel report. And
Sure.
Can someone tell me when they're going to stop losing money? They did beat. They lost 4 cents versus a 15% estimate. They did okay on sales. It looks like their Q2 revenue, kind of like they guided, like I guess towards the lower end of the revenue. A little bit upward guidance. I don't know. This Intel, it's getting a pop here, Dennis. Is it going to have legs today?
I don't know. It's been such a dog for both me and you, Joel, here. I know
Yeah.
it's come back to near to where I bought it. I've written some covered calls on this. So, I've been going through my long-term portfolio and the stocks that I do own, and there isn't that many stocks anymore because I've raised so much cash. I have been writing covered calls. So just, saying that the range persists. If they take me away on some of these stocks, I've written covered calls in my long-term QQQ position too. They take me away, I think I'm going to get them back cheaper. So, and again, you don't want to just write covered calls on anything because some stocks could go down. Plasma making a good point in the chat too. I do think, I wouldn't have all this cash if I thought the market was going to go higher. I just don't know if I feel like it's going to just tank here either. There's a risk though. There's lots of risk. But Intel here, it's been chopping around. It gets back up here, this $32 in main resistance.
Jumping.
If you're in this thing for a trade, I have the covered calls on it now, so I'll probably just let that go. If I lose the stock, I lose the stock. But and there's decent premium in here. I think I went out like I don't remember how far I went out, 3 or 4 months, and I think I got $2, Joel.
I remember talking about
it's pretty decent premium. Again, I did this back when VIX. I did this over a month and a half ago when the VIX was when I had the original rally there in March. I think with the VIX, down here, you got to reevaluate those premiums. We're not above 20 anymore. We're starting to come in. So make sure you're getting paid enough. But, 17 still somewhat elevated. Historically, we're usually 14 to 17, so we're still high. But, we're not 25, 30 anymore. 17, the premiums aren't going to be as good as they were a month ago.
Dennis gave you a great level here. And this $32 area, right? You had the big rally up over 33, and then you came down. You're like, okay, we're just going to hang at 32. We're going to hang at 32. And then, boom, you get the flush down to 29. All those old lows in the area, you just popped above it just little bit here in the after hours. So I would just keep a real close eye. If this can't get or clear the 32 hump pretty early, I would look for a little bit of a fade in Intel. The top, I don't know if you'll get to the top of yesterday's range unless the market really goes into reverse at 29.95. That was the top of yesterday's range. But we do have something getting absolutely killed today. We got a couple things getting killed, but we'll stay on the technology here and Snap. Oh boy, oh boy, oh boy. Snap. I think I mentioned something about support at 10. We'll see you later. Snap, they made a penny versus losing a penny, but they couldn't make that that sales number. They came up shy, pretty shy, 988.61 versus 1.01 billion. They are not providing formal guidance for revenue or adjusted EBITDA for Q2 of 2023. Is this just a matter of Meta eating their lunch here and fighting back on
TikTok more than
TikTok?
anything,
Yeah.
Joel. And I mean, Snap, we used to talk Snap a lot on this show because Snap was always the first to report. It was before Meta, it was before Google. So what would happen was the slippery slope is that Snap would report and that would move Meta and it would move Google as well because it was the first, indicator, for how online advertising is doing because none of the other companies had reported. And then Google would move the entire market. And we don't have that now because they moved Snap later into the earnings season. So now Snap becomes meaningless to those other stocks because we've already heard from Meta. So you're wondering, how is Meta up if Snap is down? Well, we already heard from Meta. So we don't have to worry that, Snap's not doing well. Maybe Meta's not doing well either. So now Snap is meaningless to Meta, meaningless to Google. So if you're because they already reported. So now Snap is pretty much meaningless to the overall market. It was very influential when it was earlier in the earnings season, since they moved to be behind those stocks, and I think they did it intentionally. Moved it, further down in the earnings season. It doesn't move the overall market anymore. So
Yeah.
it moves itself though. And I mean, if you're a Snap trader, it's going to move itself. And if you're looking at something like this, down 19%, it's a pretty ugly day for it. I mean, here you are coming back down, perilously low to the 2023 lows here. So do you bounce down here? Maybe. You got that buy the dip mentality in here, but we still have the tale of two markets. It's been mega cap tech, and then it's been everything else. And a lot of these zombie companies, the ones that aren't making money, and I don't know, did Snap make money? Is it officially zombie-like?
They made a penny versus losing.
Okay, so I guess it's not officially zombie-like, but there's still a lot of these, mega or these smaller tech companies that are barely making money or losing money that aren't rallying. Look at ARKK. We can say, what a rip roaring rally. Well, you know what? We've kind of given back the majority of the 2023 rally. We started at $30, had that huge run in February up to 45, and then, we're 40. Now we're 35, and we're starting to leak. And obviously Tesla's involved in ARKK quite heavily, but all those other companies that are in there that really aren't making a lot of money starting to leak. Now, ARK has great support at 35, so if you want to take a shot, I won't argue with you. If you want to try it, 34.81, you're buying right on the lows of the last 2.5 months. But, it's definitely relative strength is not there. So that brings me back to Snap. Do I want to be just going bottom fishing here in companies that are barely making money or losing money? That's not the companies they've been buying. They've been buying companies on the dip that, are obviously making money and, of reasonable valuation here. So I'll probably stay away.
You got the spike. Wow, this thing spiked over 11. Holy mackerel. And then boom, you saw the drop. They took it down to 805 here. And now I think people are like scratching their head. They're like, well, I would have loved to buy that like 810, 820. And they missed it. So you're finding some support here at the 850 area. Nothing major. Just the way it's bid here now and the way it's down 19%. I mean, if you're shorting it here and you think you're going to cover at $8, you better. I would have a short leash on trying to short it down here on the upside.
I know short stocks 20% down.
Yeah, in the hole,
and especially in a market that has been what we've been talking about sideways. Ding, 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 ding. Selling here, buying here, not the recipe for success in a contrarian market.
All right, and then I mean, if it ever gets back to $10, that's gonna be major resistance. Let's continue with the disaster and another disaster of the day. Cloudflare getting absolutely lit up here. Little buyer of 44. So Cloudflare they beat. So if you were jumping on the headline number, they beat by a nickel. They missed on revenues, but they did not like that guidance. It's
not even that bad.
No, it wasn't. What do they not like about this report?
Well, they don't like that the revenue is going to be a little bit light, I guess. I don't know. It doesn't seem like it should be, but here is this market where you try to analyze fundamentally the technical moves, and you're like, well, they didn't like the guidance. The media will justify it after the fact every time. But I mean, it wasn't that bad. The EPS was fine. The sales was a little bit light. The revenue guidance was a little bit light.
I see
and,
that.
And maybe that's what they didn't like. But to knock it down 25% on this, like they hammer stocks, they hammer them when they find something they don't like. So this is a very vicious market. We saw with the NPH, NET. I mean, it's hard to be like an investor in some of these companies that are have these ridiculously high multiples or zombie-like companies, because when they just miss revenue just slightly, they hammer. So I don't know. Cloudflare down here, you got some support down at 40, but am I going bottom fishing in it? Probably not.
42 was your panic low there, just massive selling, and now that the now that the big selling, the dumping has could be more, but now someone's saying, I want this at 44. I mean, they're in the pre-market. I'm not going to get 42. So if longer it takes to breach this 44, currently trading at 44.99. I would look at this as, if I was short, I'd be hoping, all right, cracks 44. I'm a buyer between 42 and 44. Not much on the dailies here. One daily. Oh, look at that. A daily January 26 low, 42.26. So if you just stuck a blind bid out there at 42.26, you would have gotten done and you'd be up 3 points. But to only one daily low in that area. And now I tell you, this guy from Citigroup last Friday, the after the close downgrade to sell of First Solar, that might be one of the best calls that I've seen in a while. First Solar misses, and did they miss? They missed big time, 40 cents versus 93, and then they missed on the sales by almost $100 million. Dennis, look at this, hanging
Solar
out
is a
near.
mess right
Look
now.
at this. What's going on with Solar?
Just a mess right now. I mean, obviously the NPH, but First Solar has been the darling of this year. Now it gets hammered here too. I don't know. You're coming back into support in First Solar at 180. But if you were so inclined to try to buy the dip in ENPH, that was pretty tough there too. There's been 2 insider buys on the ENPH the last couple of days, and that isn't even helping the stock. I don't know what to say. I mean, again, we're just in this environment where, people are like, oh, yeah, the stocks are going up. It's great. There's so many stocks not doing that. Tail of two markets, mixed messages continues here. First Solar not looking good either. Great support at 180, though, where the old resistance becomes new support. So I will say it's down here near support right now.
Gapped up off the last report, so you do have a gap area between 177.29 and 169.77. Don't know if you're going to get there today, but the first near the pre-market low, so 180.66 is your pre-market low, and then really the only thing you have there, as I mentioned, was this is probably from the last earnings report. Man, look at what they do off one earnings. Was that earnings back in March? Holy mackerel, look at that move. And now
straight up and straight down,
man,
right
oh
through this
man,
whole area.
you got to sell into strength. And then let's just look at a few other run. That is
none of them look good. So that's held up. It's a China name. CSIQ is looking like it's ready to fall off a cliff, to be honest with you. But sometimes they look like that and then they turn around. I'm just going through ENPH. Obviously, we already did SEDG. That reports. Did it report already? SEDG. I feel like it reports.
I don't know. I'd be shaking.
Yeah, it's next Wednesday. SEDG is reporting next week. So I'd be nervous on that too, because you've seen ENPH. Maybe that bar is low enough. Maybe SEDG from First Solar and ENPH can get over it. But, it's just sitting here in a range here too. And none of these things are cheap. The biggest problem with maybe First Solar, PE isn't bad, but ENPH PE has never been, cheap. That's why I haven't put in the long-term portfolio, even though I kind of liked it at 200, and that didn't work out very well. I'm just trying to see I'm going to bring up the PEs for some of these here.
Okay. Why don't you do that?
It's an interesting exercise. I'm trying to bring up the PEs here. So ENPH. Well, no, we're going to go to First Solar first because we did ENPH yesterday. So First Solar PE 26. Man, it comes right back to this, like I keep analyzing this market and thinking, well, yeah, we're going to run up to all-time highs and we're going to go. Like people are telling me this. You got to get invested now for the next big bull run. And I just keep looking here, and I was like, what's a catalyst? One, stocks aren't cheap. Two, we're starting to see growth slow substantially. I mean, bloody Amazon's talking about AWS growth, declining. I mean, that's not good news. The earnings report which we've got have been okay for the mega cap techs, but they've been mixed messages all over the place. You got you still got 5%, risk-free rate out here. And you've got inflation that is still somewhat of an issue, which we're going to get another data point on.
Oh, yeah. What time is it? Oh, it's 8:25.
So maybe, if
okay.
inflation can come in later today, maybe that kickstarts the next, move up here. PCE is important. If we can come in here and continue to beat inflation here, maybe. But I think the thing that the bulls aren't considering is that they think if we just beat inflation, that the Fed is automatically going to start lowering rates immediately.
And I don't think that's the case.
I don't think so either. I think the Fed wants to make sure inflation is dead. And I don't think they're going to pivot for inflation. I think they're going to pivot for recession. And if we go into recession, you're going to see a lot more stocks like UPS. UPS is, your indicator here that the market is not willing to accept lower profits, or UPS wouldn't have gotten hammered to the tune of 20 points the other day. So you can't have your cake and eat it too. There's going to be, if you're going to get a pivot in the second half, it's not going to be because of inflation. It's going to be because of recession, and that's not good for the market.
Okay, Dennis, I want you to be honest with me, and I want you to tell me how much volume you did in TOP last night.
I watched this thing last night go from $45 to $220. Never touched it.
$220?
$220 last night. Bring
$260.
$260.
Yeah.
I didn't even notice that one. You know why I noticed this? Because I got the trade ideas. Shout out trade ideas. We love you. I got the trade ideas scanner running, and it's just popping off because it's making new highs. And it's like in my filter all the time. And I was like, I didn't even know what top was 2 days ago. And now all of a sudden, the stock's in my filter every day, not every day, for 2 days straight. It's just sitting here, flying. I mean, this is crazy. So some China stock, I don't even know the story to this. 20 to 240 last night. Now it's back at 75. Holy mackerel. You want to gamble? This is your stock if you're gambling.
I don't know. I don't. It's a low float stock, and article on China's Sina, whatever that is, dated April 25th, titled, someone help me pronounce this, Zanyag Financial Group's additional issuance was approved by the U.S. SEC. I am not doing any technicals on this one. I'm out. I'm out on that. There is
go
no
anywhere it wants to go. We know how these stories end. They end in tears. I believe you saw the top after hours last night when the 260 people thought it was going to 1,000. Now they're 75. They're like, well, it'll go to 1,000 tomorrow. And that's how the hopium starts. And then they look at it 2 months later and it's back at $5. And they're like, how did I lose all my money? So we know how these stories typically end. The problem is if you short them, you just don't know where, how high they can go. You'd be shorting at 40 or 50. And 2 months from now, maybe you make some money, but can you hold through that? And what the hell is the cost to borrow this thing? I doubt you can even borrow it. Let me just go see curiously. I doubt you can even borrow this. We're gonna get PCE in 2 minutes or something.
Yeah. You know what? I'm gonna.
It's 100% a year to borrow it right now.
Yeah,
100% a year. I'm not even sure I can get a locate. I'm not even gonna try. I don't even want to touch it just in case I accidentally trade it. Scared of these kind of stocks. This is not my cup of tea.
Okay, I'm gonna save another disaster report for after the PCE, and that will be pin interest. Another.
I heard somebody else call it pin interest on Pinterest on CNBC last night. I laughed out loud. I was like, oh my gosh. And I don't know if she just messed up when she called it or if she calls it that too, because you're the only person I've ever heard call it pin interest. And I always laugh. And somebody on CNBC, they were giving I think it was an analyst, they were giving it, they're like pin interest. And I was like, that is awesome.
You know what?
Somebody else called it.
You know what? Someone got me, and I've heard it from so many people. They say Tesla. And then like a couple days ago, I was talking about it, and I've never said it. And I'm like, and I said it, and someone in the chat caught it. And all right, it's 8:29.
I'm getting out of the way here.
It's our Go Wide segment.
I'm going in the background. Joel's going to take you through this show by himself, but I will be back.
Okay, it's the core PCE. personal consumption expenditure price index coming in. The previous was 0.3, the consensus is 0.3, and the forecast is 0.4. So if we get a hot, I'm just going to give you the price action here because I can't look at 94 different things and give you. So I'll just set up the price action for you here. And the price action is we're down 13 and a half handles at 41.40.50. Mild interest for me would be a potential resistance point would be 41.43.50. The morning bounce got up to that area a couple times, and we're moving. That's a big old bar right there on a 1 minute. 41.36. We're pretty much in the same area. We spiked over that 43.50. So if you had an order in at 43.50, you did get done. Still chopping around 41.39, 41.40. We're looking at Rick Santelli here, anxiously awaiting our first quarter PC index, and we're still just kind of chop. I love these algo jumpers, man. They just like, oh, let's get to stops, let's get to buy stops, let's get to sell stops. Right now, we're still there. We're still hanging in there. Pretty much, we started this bar right at 41.40. We're at 41.38.50. We had that initial move. Come on. Is this not going to be a mover here? Come on now. Give me some data. Now we're little pressure, more selling pressure. Pre-market low comes in at 41.31.50. Nothing there, folks, at 41.31.50. What we have, employment cost index higher, 1.2% versus 1%. That's not what the market wanted to hear. You are getting a little bit, the consumer, you just can't break this consumer. They're still spending. We're still getting a little bit of chop here. There is some mild buying going on. That
They don't know what
pre-market
to do with the
low.
inline number. So
Oh,
PCE month over
okay.
month, 0.3% right on the 0.3% estimate. The bots don't know what to do with it. So we went really wide, went 8 points wide in the S&P at one point in time. Now we've closed in and we're kind of in the same spot. They don't know. It wasn't definitively hot. It wasn't definitively not. It's in line, and they don't know what to do with it. The bots are just sitting there. They don't know what to do with it.
How do you stump a bot, right, with an inline
Give them
number?
an inline number.
Yeah.
Month over
Okay.
month, expected to be up 0.3%, and I was up 0.3%.
Okay. Did Dennis? Did was there any reaction in the stocks or really?
No, they just sat there doing nothing. And I mean, that's, what this market does sometimes here is like it doesn't know. And the stocks, if the futures don't know, the stocks definitely don't know. So stocks,
What?
on these numbers lag the futures always. So at certain points in time, stocks can lead. On 8:30 numbers, futures always lead. So
Yeah. Okay.
futures
Yeah.
go, stop, everybody's like ready to trade the stocks off the futures. Futures don't move. They don't know what to do. We are starting to rally here a little bit here.
Yep,
We're
we
starting
are
to pick
trying
it
to.
up.
Yep, trying to get over mid range here. As I mentioned, let's just want to do one more earnings report here. I'm going to say it right. Pinterest, right?
Ooh.
Yeah. Okay. All right. Let me give you the report here from I never really understood this stock or understood this company, but where's the report? They beat. So if Dennis was hopping on the headline number, they beat by 6 cents and they beat on revenue. Global MAUs are up 7% year over year. Wow, what great news. How's the stock doing? Down
It is
three.
so hard to figure out, taking fundamental information and then projecting where the price is going to go is nearly impossible in this market because you're right. 8 cents to beat. MAUs up 7%. I don't know where expectations were on MAUs. Maybe it was low. We expect our Q2 non-GAAP operating expense to grow low teens on a percentage basis quarter over quarter. They're talking about a reduction in the workforce. I mean, nothing really tragic in this report. Yet the stock's down 11%. So, go figure. I'm just going to go on a tangent here just for a second. We'll bring it back to pins. But I want to talk Crocs from yesterday because Crocs was an incredible move. The stock was down 20 points yesterday, more than 20 points. And if you look, they had a beat, and a raise. They had a beat, raise, and they killed it for 20 points. I mean, this is this market. You think you got to figure it out, and you don't. 261 versus 215. That's a huge beat on the bottom line. This is Crocs. 884 million versus 856 million. That's a huge beat on the top line. They see their sales, they're looking at 1117 EPS. They're looking at 1117 to 1173, making a ton of money versus 1086. So they're raising up guidance. Doesn't even matter. They're like, no, not good enough. We were buying you up at the highs before the report, and we're going to punish you. So expectations were just simply too high. Stock had run up too much, running from 130 to 150 in a week before the report. And they hammered it and gave it all back. Unbelievable. Would I buy the dip in Crocs? Maybe.
You know what they don't like about this, and I actually did have CNBC on a little bit. Hey Dude, did they bought Hey Dude? Have you ever heard of Hey Dude shoes? No, I looked at them. I'm like, hey, dude, I'm not wearing those. They bought. I'm a shoe guy too, and they bought they bought that company, and they were integrating expenses. They're worried about the expenses or whatever. But the CEO was on. He's like, I really think this is an overreaction to the stock and the acquisition. It had a bad day yesterday. Let's see if it can stabilize just under this 120 area. Trading in the red. I wouldn't look for any green until you could clear that closing price of 124.32.
Well,
But
look at the 110 level. And it's not, I don't think it's going to get there is the problem. But that 110 level would have been an awesome level yesterday. I got down to 116. Look at the 110. The low,
boom,
February
boom.
in February, 110.69. The two lows in March, 109.47, 109.76. 110 is like a 5 or 7 star level, Joel, on the Joel Elconin level system. So
what about
I don't know if you get there, but I would be a buyer at 110 if it got there.
What about the three lows in January at 984, 888, and 965? Yeah, I would have.
The Harlan Pyan. You know, Harlan Pyan used to say, bring up a chart and what level jumps out in the first couple of seconds. I look at this and it's 110.
Okay, guest time, and we have one of the Jeremys from over at Wisdom Tree, Jeremy Schwartz. He is the Global Chief Investment Officer at Wisdom Tree Funds. Roll the intro, Aaron. Jeremy.
Cool. Good to be with you, Dennis. Great to see you guys.
Yep. And what do you think? I mean, what a mixed bag of earnings. We were going back and forth earlier in the week, and you guys are doing your, putting the pencil to paper and figure out these earnings. I mean, the good earnings, bad earnings. I mean, give us your overall take here on Q1 earnings season.
You know, it's actually coming in pretty well. I mean, they weren't expected to be a big growth number. I mean, we've got this new tracker, and I'll pull up some of these things so people can see that. Perhaps can I share my screen?
Yeah, go ahead. Yep.
Let's see if I could do present, share screen. I'll start with my Twitter because I'm starting to put all this stuff out on Twitter so people can see. This is our and just confirm you guys all can see that.
Yep.
Beautiful. So how to read this? The far left. This is a S&P style box grid. So using the S&P 500, 400, 600 for large to small, value to growth, and the far left is what basically the estimates plus what's already been reported. So you keep updating that as people report. The middle box is just how it's going for, now you've had 56% of the S&P weight report as of last night. And that's down 70 basis points, but it's surprised 7% higher than what people expected. You always hear about this consistent beats, that they always lower the estimate so they can beat. And you are seeing 7% beats for the S&P 500. Now, but in general, the earnings were supposed to be down about 5%. Now, this is 2% higher than it was just a few weeks ago. So it's sort of a sense of how these things are coming in better than expected. And the surprise factor has been pretty good. There's only 2 reds on the surprise, and that's in this sort of blend and value for small caps. And when we drilled into what's going on there, first there's sort of half is the weight is reported. There's only 30% of small caps who report. They sort of tend to report later in the season. And it's definitely being driven by a few companies. PacWest is one of the small cap banks that had a pretty bad number, and it's impacting the S&P 600. Interestingly, I also show it in the Russell, and the Russell, if I go down in my thread, where's my Russell view? So here's the Russell view. And in the Russell, it's not negative, and it's because in the Russell, it's in the mid cap index, and it's sort of being hidden, amongst things that are beating more generally. And so, I'd say in general, the season's going better, but you can see in aggregate, you are getting declines, and you're getting big declines in small caps. So I think that's one of the things, small caps more sensitive to the economy. You get more of the banks in small caps. And so I think that's all part of the our current read.
Jeremy, this is so interesting because it brings light to how important expectations are. And I think where last quarter, and maybe everyone had, feelings, and I did too, that, there's a recession imminent and it's coming. And, I think maybe the guidance in the last quarter from a lot of these companies was conservative, even though they maybe weren't saying it was conservative. Now they come out and, hey, it's not that bad, but when you really look at it, we're not growing here, though. I mean, these earnings are going down. So, I mean, just because they're beating the lowered expectations, is that necessarily a good thing? I mean, and then, obviously Tale of Two Markets too, if you look back to, obviously some of the mega cap techs have done really well. And to your point, some of these small cap stocks maybe haven't done so well. I just see earnings decline. I think, here you are in the S&P, trading 19.5 times earnings here right now. And they're beating some expectations that are lower. But when you have overall earnings decline here that you're talking about here, I just don't see this as, a great value here at this point in time.
Yeah, we've been more cautious than usual, particularly from the other Jeremy, as you talked about. I mean, stocks for longer and Jeremy tends to be pretty bullish most of the time. That's right, generally the right call. 75% of the years you're up. But this moment in time, and if you say, hey, what's the opposite side? Everybody's sentiment is negative. There's all these indicators saying people are short on the futures. That JP Morgan puts out their survey, and only 5% are bullish. And the BAML survey shows people are overweight cash and underweight stocks, to the extremes. So I'm worried about how much worry there is, but we are still worried. And you had us on together. We still think the Fed's making big mistakes. There's no signs they get it. Everybody expects the May hike and a pause, and then the Fed funds futures are expecting pretty dramatic cuts over the next 12 months. And we think they should do it even sooner. But there's definitely a greater risk of a harsher landing than that's even being forecasted.
How much does the Fed look at the stock market? Because they say they're data dependent, but we know in the past, and obviously during the COVID crisis, they're coming in the stock markets down, 1,000 points in one day, emergency rate cut. I mean, how much does the Fed, they say they don't look at the stock market, they just look at the data, but I don't believe that at all. How much do you think the Fed actually looks at the stock market? Because you look at the stock market, it's S&Ps, and you're like, oh, we're holding up pretty well here. Maybe we can continue to raise rates. Right. I wonder if there isn't some of that going on behind the scenes. What are your thoughts there?
Well, I do think there's definitely that narrative out there a lot, that Powell's trying to get rid of that narrative that there's this Fed put, that he's taking actions even going harsher than he otherwise might be, because he's trying to destroy that narrative, Dennis. So there's some people who say that. I think at face value, he doesn't really care what happens in the market. He's really not trying to control it. There is this reinforcement loop of a wealth effect, and that to the extent that there is a self-feedback mechanism that the equity declines can feed on itself and create slowdowns and make companies more hesitant and all the rest. So there is an element of that. It does impact the economy, but they're really now focused on inflation more so than other things. And their view is that that inflation is sticky, and our view is that inflation is collapsing. So, it's this different world. We're very concerned about the money supply. That's what he should be focused on, that he's not been focused on. And, the money supply is contracting at levels it hasn't done in 90 years. And he says there's no relation between money supply and inflation. That's much more of an important link than they've given credit to than the market. But they're now focused on wages. Again, he shouldn't collapse people from trying to catch up with inflation. They're not even keeping up with inflation. Let the workers catch up. Don't be anti-labor. and prevent the workers from keeping up with inflation. So there's a lot of there, but I don't think it's that he's just tracking the market and saying he could keep going. I think he's wrongly focused on some of these inflation metrics.
All right, we're on the line with Jeremy Schwartz, Global Chief Investment Officer at Wisdom Tree Funds. So, what's it going to do? What's going to shake Powell out of this stance of driving the the economy into the? I mean, is it inflation numbers? They seem to be coming in line. I mean, does he need an epic collapse? What does he need? And then also the second part question here. Is it better to put our money somewhere else? I mean, in the U.S., maybe, there's time. We've had underperforming markets for a long time. From a global perspective, I mean, should we be looking at other places?
So, those are great questions. And on my dashboards here, I'm going to show a few different things. Maybe I'll stop and then reshare. On what is it going to take for him to realize negative employment reports, start getting some view that there's slack in the labor market. So if you get a string of negative employment reports and how quickly unemployment rises, because he's now focused on the wages element. And again, we don't think he should be, but that's what he's focused on. So negative employment growth, softness in the economy, that gives him idea that there's slack and wage pressures will come down. That's going to be the key to see when he pivots. In terms of what might cause that, there's underlying, we're calling this banking dynamic, and you're now there's all this stress about First Republic, and maybe the markets don't care about First Republic, but it's collapsing. There's these longer term pressures on the banks because they're not keeping up with Fed funds. I mean, you could get 5% in 1 week treasuries. I mean, we have an ETF, USFR, that took in 10 billion last year, taken in 2 billion this year. I mean, the day my bonus cleared, I moved it to my Schwab account and bought that ETF because I'm getting 5%. And your banks aren't appropriately paying you the 5% deposit rate. And so bank profitability is going to come under pressure because there's going to even be more fintech solutions that make it just easier to spend off treasuries. I mean, we're working on those type of things. But there's people the banks will have to keep up with deposits they haven't really. And so we call it a bank walk, that there's slow moving movements of people realizing they can get more in their checking account. So USFR, floating rate treasuries, definitely the safe end of the curve of where you want to be for getting the true income you can get. And I think that banks still come under pressure from that. Now, in terms of where around the world you want to be, I have on my screen a piece. I'm going to share back that. And this is not, we're not ready just because he did this, but we wrote a piece 3 years ago, follow Buffett into Japan. And we said, Buffett's back for more in Japan. He's done incredibly well on his buy. Since he bought his stocks 3 years ago, they're up 140%. The S&P is up 22%.
Wow.
DXJ is one of our flagship Japan funds. It's up about 57% over that period. So it's done about 30% better than the S&P. His stocks today, he bought 5 stocks. I followed him in 3 of these stocks when he bought it, and doing quite well in those 3 stocks. But, our DXJ is 3.8. His basket also has a 3.8 dividend yield. These companies are growing their dividends almost 70% since he bought them. And I think that sort of corporate governance example leading by that is going to have positive effects on the rest of Japan to grow the dividends. We talked about the S&P at 19 times. Japan's at 9 times. It's got an earnings yield of 11. This is not an expensive part.
I mean, and you think about, there's been a 35-year underperformance here in Japan because we topped out, I believe, back in, if I don't know the date right, forgive me, but I think it was 1989 when the Nikkei topped out. So we've been down here for basically 32 years, still never got back to the highs. So obviously, valuations have been suppressed here. I wonder how much, just a question is, you get, people who want to invest over in Asia. And I wonder if there isn't a little bit of a China boycott here, like people, is a little bit scared to invest in China. We don't know what they're thinking with Taiwan. I've been scared to invest into China. But if you want to invest in Asia, maybe Japan's like the safer alternative to China here right now as well. What are your thoughts there?
you're echoing what I've been saying.
Oh.
Earlier this year,
I should
6
listen to you
weeks
more.
ago, 6 weeks ago, I did a piece saying you should buy Europe and Japan exporters for the China reopening, not China. And what is happening? China's negative. We have a European funds of 19% this year, almost as good as US tech. The European multinationals are up 90%. And it's sort of, and that's also a cheap basket, at basically when I wrote it, it was like 10 times earnings. I think it's probably still close to that. And so Japan is at the center point. It's our obviously ally over in the region. It's, if you look, what's fascinating, my colleague Jeff Winter puts a number of charts on Japanese wages versus US wages. If you go back to like 2010, the wages were identical between a Japanese worker and a US worker. Our wage growth, because of inflation, we keep growing the wages, is up something to when they were identical. The gap is now you pay a typical US worker twice as much as a Japanese worker because the currency declined and because of our higher wage growth. So there is a arb there, and whether or not people go to relocate manufacturing there, maybe some of their companies bring it back. We'll see if any of that happens. But there's definitely labor is now twice as cheap as a US worker, and not saying they're obviously perfectly substitutable, but there is a value to that. And then stocks are cheap. I mean, if you're just buying the stocks, they are cheap at 10 points lower than the S&P. And you get these sort of positive corporate governance stories. And as an alternative to China, Japan's a good hub for people to locate. People are moving away from China. I think Japan could be a safer place for people to do business.
All right, we've been on the line with Jeremy Schwartz, the Global Chief Investment Officer at Wisdom Tree Funds, and great follow on Twitter. Jeremy, thanks again, and we'll be speaking to you real soon. Great information you're giving to our investors. Thanks for coming on.
Always a pleasure. Thanks, guys.
Okay. All right. S&Ps are just trying to hang mid-range on the session here, down 10.5 handles at 41.43 and a quarter. So it's just real still indecision coming off that PCE report. Really, we haven't moved at all. Amazon is back above yesterday's low. The bulls are trying to defend that 106.80. So that will be your driver here today. Dennis, you see any other drivers here before we go to our TradeZero segment?
Go to the TradeZero segment because we'll find more drivers in there.
Okay. All right. Well, take it away, Aaron, with the TradeZero. All right, Aaron. Let's start with the filter. Like everyone likes to be positive. Yeah.
Top, of course. Top is right at the top. MEGL is another one of these China plays. So it's littered all these little China plays here. I think AGBA is one as well. So you can see TCJH is in one as well. Here we're just looking at them all here. HUDI is one of these. So they're all hoping these are the next tops. So hard to chase some of these things because a lot of times they end in tears. So Intel near the top. We talked Intel already. Mondelez reported earnings. Defensive stock on a day we're down. It's not surprising. Mondelez showing a little bit of strength. I think the report was fine. Nvidia is up on Intel. I mean, I'm looking here, and this is all kind of stories we've kind of covered here. I mean, we got to go to the loser unless you see something that strikes your fancy.
Well, just I'm looking at this Mondelez, and boy, oh boy, have you seen the Great American Chocolate Bar lately?
The shrinkflation.
Hershey's, man, busting out to a new all-time high.
Yeah.
These food stocks, I mean, General Mills at a new all-time high. I don't know if people have been going Kroger in. Kroger in is a little bit different, but boy, those food stocks have been strong. Trying to see if there's anything else in there in the up filter. Not really. All right, let's go to the down filter then, and boy, oh boy, First Solar, Dennis. I mean, we did talk this one already. Hanging above the pre-market low.
Can we filter it by percent? Just grab the percent column because we're going by points. Let's go by percent. There you go.
Okay.
Give you a little bit different feel here.
HILS, Dennis. Heading for the hills. Hillstream Biopharma. It's a small stock. Nope. Next.
Stocks under $5 we usually don't talk about unless it's top because it was just fun. Well, it was under $5 2 days ago.
EHTH.
I've
eHealth.
not talked that one. That's a small one too. So I don't know if I had earnings or whatever. I don't follow the story whatsoever. So again, it's too
Okay.
small for me to cover. AMZU is Amazon. So you're talking the 1.5 bull Amazon. Again, my pet peeve is all these new products being created. I mean, why do you need a 1.5 times Amazon bull? Why don't you just buy a little bit? If you wanted to buy 100 shares, buy 150 shares. Why in the hell do you need to go trade the 1.5 times bull? Just buy a little bit more. All it is a way for, they're trying to get around margin, is what they're trying to do on these products. I can't believe the regulators allow some of this stuff to be created. So sorry, Direxion. I know you create a lot of cool stuff, but this 1.5, I get the inverse one because you can't short in your Robinhood account. So I get those, because there's like TS, I believe it's L. I don't know what the heck it is. There's TSLL is the bull one, and then there's the other one that's the bear one. But a lot of these products, I mean, we have derivatives of stocks and derivatives of this. I just think it's like so much that we just don't need. We don't need an AMZU product. We just don't need it.
Okay. All right. I'm looking at this down filter here, and boy, oh boy, it seems like cybersecurity stocks here. We got our technology. I'm lumping them all together here. Zscaler. Boy, that spiked down.
Well, these
That's
are all okay. So your cybersecurity stocks are all getting hit off Netflare. So you got Zscaler, CrowdStrike, all getting hit here. If I went and looked at the filter, if you want, the ETF for that, Hack, great symbol, HACK, it's down 1%. There's also CIBR, which is your cybersecurity one, which is down here as well. So all of this is going to be down here today because of that.
okay, and you could throw Fortnite in there too.
Yep.
I just will say that the NET here, it's catching a little bit of a bid. I don't even know if you're going to get a look at that 44 area now. Big decline starting to inch its way back up. We talked about Crocs. We got the old ADI I see floating in there. Analog device, that's flat, so I'm not sure why that's in there, why it'd be in the down filter at all. But let's start. I see the big stocks. Dennis, what about the Goog? I mean, it already reported here. It got the pop. I mean, I think you guys got to keep an eye on these mega caps today too, right? They've been dominating the market. Google hanging in there. Amazon getting above its previous day's low. So we'll see. We're hanging in there. We're above mid-range on the session. So, okay, that's going to end our TradeZero segment. We're going to do 3 more quick earnings reports. Did we do pins? I know we started to talk about the actual.
Yeah, we did. Let's move on. Exxon and Chevron getting no love from us on this show. It's 2 stocks that I trade every single day. I trade Exxon and Chevron. Why? Because they move so well with the XLE. They're huge components, obviously, in there. And Exxon and Chevron, so, we don't talk about them a lot on the show. I day trade these almost every single day. So no position in either right now, so freely talk about them. But ExxonMobil reported. Give us the numbers here, Joel, from the Benzinga Pro.
Yeah, those numbers are good for ExxonMobil reporting this morning. A big beat, 283 versus 259. Big beat on sales, 86.56 versus 85.41. So you snuck it. Oh, this 118 level. This is what we're going to be focusing on today. Your pre-market high comes in at 118.15. Your high, I believe, on Monday, or call that Tuesday, was 117.74. The recent high is 118. Excuse me. The high from Monday, 118.89. You look like you got a pesky little seller here at 118, but 118.89 would be a nice target on the upside. All-time highs a little bit higher than that at 119.63. Let's go. Really not seeing anything. You just got to get through 118.
Again, these oil stocks priced for perfection is the problem. I mean, ExxonMobil's sitting near, its high of the year. And you have a lot of oil stocks that have actually come off the high. So ExxonMobil really, they've gravitated to this one here. With XLE slightly off the highs, it's interesting that ExxonMobil is sitting right on the highs in reports. So report's not bad. The stock is kind of trading higher here, but I think you're just at a point where, even though the awesome report, it's not going to gap up $10 on that awesome report for the simple reasons a lot of good news already priced in it.
CVX, quite a distance from its all-time high. Boy, announcing that buyback after a Q4 beat, and they just murdered it after that. The report, let's see here, 355 versus 341. Nice beat on sales, almost by 3 billion, 50.79 billion versus 47.89 billion. Not good enough for the street here. Traded down 95 cents at 166. You can lead on 165 here. That's been the low since you had the OPEC cut. So 165, you take out that 165, you got a little bit of a gap fill, I believe, from that OPEC day. That would be down to 163.72. When you have a stock trading in the red after a good earnings report, you always want to see it go back to unchanged. Unchanged comes in at 166.95. That was pretty close to the high of the day yesterday at 167.39. Well, we're coming up on the 9
Just
o'clock
before
hour.
you leave the oil stocks here, I just want to say Oxy is coming into our buy zone that we have played multiple times. The Warren Buffett buy zone has been 57 to 60. It's bounced off 60 the last couple of days. I'm not sure if he's going to strike early or not, but at a certain point in time, we start getting back to the 58, 59. I'm going to reload Oxy.
Okay. All right. Oxy, yep, it's got a little gap area. We know just is that Warren out there at 60 is what we're trying to figure out. All right. Well, let's wrap things up here on this Friday, end of the week, end of the month here, Dennis. And let's see. Can we hold on to the gains? We're gonna look at Amazon being our driver today. Inside day, perhaps, in the markets.
Maybe. Remember, it's the end of the month, though. So sometimes you see some wild swings. So we haven't even mentioned that yet. It's the end of the month, last trading day of the quarter here, or not of the month. Sorry, not of the quarter, of the month. So sometimes you see some wild moves at the close. So just keep that in mind. There could be some movement here at the end of the close. Institutions. It's not as big as like an end of the quarter, like March, June, September, December, the big ones. But in a month, you can sometimes get some movement too. So just keep that in mind that it is the end of the month. I think you're just going to chop around. I think we're still big battle between the Bulls and the Bears. The PCE number did nothing to, change that narrative here today. Came in line. Really, their bots don't even know what to do with it. Amazon's chopped around, rallied, come back. Could it rally back up? It could. It could go anywhere from this point in time. So very hard market to predict. I would just say the fade trade is still the trade, meaning, you're buying dips, short and rips. I mean, we haven't said that for a few days, but I've been saying it for basically 12 months straight. I mean, fading and contrarian strategies have worked much better in this market than momentum strategies.
If you ain't fading, you ain't trading. Joel Elconin and Dennis Dick signing out on this Friday, the end of April. We'll see if it's sell in May and go away. We'll be back with you guys bright and early Monday morning. Everyone, have a great weekend.